Alright, what's up traders? Coming to you from behind the scenes of this market. I love this market, I'll tell you, I really... Oh, look at my eyes. It's getting towards the end of the week. I'm about to actually go to the gym, but I thought I'd do a bit of a behind the scenes recording. There is my calendar. See my calendar there? That's my calendar, and see those X's? That's my date. That's my night. For you guys that know my 90-day challenge of me being grateful and visualizing. Hey, I'm going to do it every single day. I've got a 90-day challenge, and I'm marking off every day. I mark it off, and this thing keeps me accountable. So if you're looking for something to keep you accountable to do something every day, even if it's something small that you know is going to help you, then do that. Anyway, so looking at the markets right now, guys, silver's really holding strong. I'll tell you right now, guys, my thoughts around silver is if you look at silver, I'm gonna do a video about this a bit later on, you know, with the funky dumpy graphics. Oh, I'm losing it. And you see, silver's looking really good. I believe we're getting ready for another lift off with silver. It's holding there nice and strong around that $20 level, and the chart pattern is very bullish. Looking at gold actually last night came all the way down to my trend line. If you've been watching me, gold came down all the way down to my trend line and bounced off that. So that trend line is actually holding, and I think we may have just put in a cycle low or a low point for Google. I've been looking at so many stocks lately, trading a lot of too as well too. I think gold may have just put a low point in, and then I think maybe moving into next week we start to have a rally again. That's what I'm seeing here. So anyway, guys, I'll show you the charts a bit later on, but I wanted this quick video for you and to share some things with you. So also, guys, what's on my radar right now? Let's actually have a look. What's on my radar right now is the VIX. I am about to roll over my VIX. I have some VIX trades going on, and I'm about to roll them over to probably around January next year, and I'm waiting for that. So probably maybe even tomorrow morning I might do December or January next year, rolling over. The VIX is now down below the $13 mark, and it's just slightly below that, which that's okay. Right now, guys, is a perfect time. If you're not in the VIX right now, it's a perfect time of getting in. I'm not telling you get in because, you know, who knows what's going to happen. But generally, when the VIX gets this low, it generally gets back up to about the 18 mark. So this is just a perfect time to be getting in. So anyway, so I'm looking to do that. Probably tomorrow morning I'll be looking to do that. My gut feeling is saying that this is actually a perfect time to be getting into VIX right now. So I really like it. The reason why is because it's at $12.82. The low point generally is around $11, and it hardly ever goes below $11. So that's where support is, right? And it's only up from there. So to me, it's a no-brainer of a trade, especially if you're looking long-term. So I'm looking to roll over my options, give me more time, and actually then actually buy down cheaper and then ride it up a lot better from there. So VIX pulled back a lot more than I originally thought, but that's okay. Hey, guess what? I really like the VIX. I'm really happy about the VIX. Another thing I wanted to talk about. Do I want to talk about something else? Oh, another thing I want to talk about, guys, is the trades that I wanted to share with you, or that I was looking at before. If you saw that video I did a couple of days ago, it was 9 stocks I was looking at to get into trades. Well, none of those have confirmed yet. Apple almost confirmed yesterday, and I'm like, no, I need a bit more confirmation before I get in. And none of those have confirmed yet. So none of those have been a trade yet. But I want to share this with you. I want to read this report to you. I just downloaded this report and I study my ass off, guys. Guys, I'm more of a trader than I am a teacher. You know what I mean? Like I just share the things that I'm doing in my life. So I'm more of a trader than a teacher. But I study my ass off every day. And last night I downloaded a report called the Stock Market Crash Survival Guide. You actually can get it from I think it's Zero Hedge, if you guys have seen that. And I was downloading this, and this is actually written in 2015. It's probably a lot worse now when you actually think about it. But it says this. Listen to this. It says many investors believe the 2008 crisis was the crisis of their lifetime. They are mistaken. The 2008 crisis was a stock and investment bank crisis, but it was not the crisis. It was just round one. Round two, or the crisis, concerns the biggest bubble in the financial history, the epic bond bubble, which, as it stands, is north of $100 trillion. To put this in perspective, the tech bubble was about $15 trillion in size. The housing bubble, which triggered the 2008 crisis, was around $30 trillion in size. The bond bubble today is over $100 trillion. And if you include derivatives that trade based on the prices of bonds, it's $555 trillion. So we are talking about a problem that is exponentially larger than anything you and I have ever seen ever. How is this possible? And then it goes into talk about the monetary system and so on and so forth. I think that first line there, guys, has to say, you know what? Maybe the government's going to put a band-aid on this for another couple of months. But long-term, guys, this thing is just going to get hammered. If 2008 was bad and that was the bubble, I think they're saying right now. I think they're saying the market's about to close. Yeah, pretty much nothing day. Actually, the Dow was the strongest out of a whole lot of them, so pretty cool. I think we're lucky to turn here soon anyway. So, the last hour of futures we sold off into, had a bit of rally, but we sold off into, and we just closed just then. So, guys, if you actually think about that in a concept that yes, we may continue up higher, but what happens when it cracks? And that's the point that I make. I prefer to be on that side and have a long-term position, because when it cracks, I'm going to make a fortune. When does it crack? I don't know. But if I've got enough time in my trades, my put options and so on and so forth, I'm going to make a fortune. But it's just a matter of when. It's not a matter of if. We know it's going to happen. I think it's a 1.5 quadrillion trade. 1.5 quadrillion derivative bubble, according to my man, Bipolar. Right? So, looking at these and researching these and looking at this, that's why yesterday I was so confident to come out and say I'm looking to put on a six-figure position. I'm looking to put on a six-figure position if the market starts to doing certain things, because that's going to show me the final top in the market, and that's what I'm looking for, and I still am looking for that. So, guys, here's some things I'm looking for, and I want you guys to think about that. And for you guys that are bulls in the market, and for you guys that are long in the market, especially if you have a long. Now, if you're short-term trading, this is not you. If you're long today and then you're getting out today, or you're long today and getting out tomorrow, maybe that's okay. You know what I mean? Maybe that's okay. But if you've got long positions and you're holding on for long term for 3, 4, 5, 6 months, and you think the market's going to go, the Dow's going to go to 20,000, I don't think that's going to happen. And I would hate to be on that side, because if the bubble does pop or something does pop, guess what's going to happen to the market? We're going to have 1,000 or 2,000 point down day. We're going to have a bigger crisis than 2008. And I prefer to be on that side. And if I've got a long-term six-figure position that goes for a couple of years, and within the next 12 months it pops, guess what? I'm riding that all the way to the bank. That's why I was so confident to put out that video today. You see, guys, I'm putting out this video. I'm putting out everything that I'm doing, or most things I'm doing. Some things I just keep for my private clients, about my private clients and stuff like that. But that's what I'm doing, guys, and that's what I'm saying. This here, it's just again, the whole thing is a 1.5 quadrillion. 555 trillion. But the whole biggest bubble right now, again, is north of $100 trillion. To put that in perspective, tech bubble was $15 trillion. Housing bubble was $30 trillion. Now we have a $100 trillion bubble on our hands. Guys, when this thing cracks, it is going to be really, really bad. If you think there was so many people being laid off in 2008, if you think there's been so many people jumping out of buildings and and killing themselves because they know, guys, this is going to be really, really, really bad. I never realized how bad it was until I actually read this report last night. And I sat there with my partner and I told her about this. She's really, really, really good at economics, by the way, my partner. And I'll tell you right now, she was just saying that this is crazy. So she's saying to me, she's opening up her account as well too, and I'm putting on positions on her because I believe it's gonna benefit her as well too when this thing happens. So I'm putting on long-term positions for silver and long-term positions short the market. We'll see what happens over the next couple of years. But we're talking like 2018 put options for expiration, and just seeing what happens over the next year. If the market does crack that 50 to 70%, which I think it's going to do over the next 12 months or so, or maybe more, I'm going to be doing really, really well. So anyway, guys, that's it for me. Hope you enjoy yourself. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.